Good morning. The week seems to be ending in an equities bloodbath despite positive earnings in Europe and the US. Blame the pandemic, most places are saying. Let's take a look. European indices closed mainly down yesterday, Spain's IBEX losing a whole percent. All this is happening despite considerably good earnings results, as we said, with COVID snatching away the narrative. The euro continues weekly up for the second day in a row, despite a rather challenging drop in the already negative consumer confidence index to minus 15.5. Part of that may have to do with the European Commission's approval of Germany's 12 billion euro assistance scheme for its manufacturers. Yesterday, the ECB held on to its current 0% interest rate level. The pound is down 0.17% on overnight consumer confidence. It fell to minus 28 in January, which was not quite as bad as expected, but retail sales, with a 3% increase, missed expectations by nearly a half. We can see the pound plunging below its 20-hour moving average and even breaking below the lower Bollinger Band, just like it did ahead of last week's downtrend. Still ahead for Europe and the UK, manufacturing, service and composite PMIs for January. At 2:45, we'll also be seeing PMIs from the US, as well as existing home sales at 3. Meanwhile, COVID vaccine rollouts are proving hugely flawed, pushing US index futures down between 1/3 and 0.5% this morning, after closing mixed last night. The dollar edged up marginally after the 10-year TIPS bond added a 0.1% in yield. Data across the board was positive. Building permits up by another 4.5% to 1.7 million in December, continuous jobless claims down to 5 million, and the initial claimant figure down to 900K. Housing starts also added nearly 6%, while the Philadelphia Manufacturing Index tripled to 26.5. Still, we'll get back to equities. It'll be interesting to see how the Nasdaq opens this afternoon, with index futures flattening out. Although the RSI here is neutrally oversold, it'll take quite a bit to flatten that curve. Asian indices are mainly down on profit-taking, according to Reuters this morning, led by the Hang Seng with 1.33% loss, and Shenzhen and New Zealand rising, the latter by nearly 2%. The yen lost 0.1% after retail sales and service PMIs for January fell by less than a point. The Jibun Bank's manufacturing index lost 3 ticks, putting it at a contractionary 49.7 for December. And the Australian dollar is down 1.3% following a painful 4% contraction in last week's retail sales. The nation's manufacturing PMI for early January shows a 1.5 improvement, but services was down by about the same. In New Zealand, consumer inflation remained at 1.4% year-on-year, but the business PMI lost nearly 7 points, placing it now at a contractionary 48.7. Bitcoin this morning is 8.5% down for the second day in a row and providing its worst week in a month. Gold is down 1/3% and currently testing if the previous 1860 resistance level could now serve as support. But oil is on target as China continues to bypass U.S. sanctions on Venezuelan oil. WTI lost another 70 cents on the barrel overnight, but the pennant forming on top of an oversold RSI could be hinting at some upward motion to come. Oil still in focus. Pipeline operator Kinder Morgan yesterday revealed a 27-cent EPS on revenues of $3.12 billion, both beating estimates. The company, which transports about 40% of America's oil, is already seeing a recovery in volume, but warns against shale companies ramping up too quickly. Baker Hughes also exceeded expectations, doubling its profits in Q4 last year. And United Airlines reported a huge loss, but said it expects profit margins in 2023 to make up for the shortfall. On the high-tech front, IBM missed expectations by $300 million with $20.37 billion revenues and an EPS 30 cents above estimates, but still 66% less than last year. Shares plummeted 4.4% after hours. And Intel beat income expectations by nearly $3 billion, coming at coming in at 20 billion, with shares earning $1.52, again 40 cents better than expected. Now that's despite falling market share in cloud computing chip sales, which are easily being offset by increased data center and PC component sales. Earnings still ahead today, Carnival Cruises and Remy Cointreau. And finally, in a follow-up to yesterday's report of Google paying French news outlets for using their material, the company is now threatening to close down its search engine in Australia if Parliament passes a law forcing it to pay for local media for their content. Well, that's all that's left is to wish you a lovely weekend. Stay safe, stay healthy.